And hello and welcome back to another video on how to secure yourself financially. So what I'm going to do here is by looking at the set.gov, the beginner guide to financial statement. Okay, it jumps straight forward to the cash flow statement, right? After all, this report is the company inflow and outflow of cash. This is something important because companies need to have cash on hand to pay expense or purchase assets. This we use the information from the balance sheets and the income statements, and the bottom line of these statements report the net income or decrease of cash. So with that, generally this is organized into three types. You have these operating activities, investing activities, and financing activities, right? So because with this, now what I'm looking is the different part of the, or looking at the different part of the the cash flow statement, right? So you have now the operating activities. That what it does is to analyze the net income from the income statement, and it conciliates with the total amount of cash that was used or perceived from operating activities. And the most common operating activities, whether it is operating assets and operating liabilities, most common operating assets are intangible assets, accounts receivable, inventory, property, plant and equipment, prepay expense, investment in affiliate, cash and cash equivalents, whether it's money market funds, for example. So with that, right, then I look at also at the most common operating liabilities, such as accounts payable, accrued expense, deferred revenue, short-term borrowing, income taxes payable, notes payable, warranty obligations. So with that knowledge, okay, and also give you an example of that. Now, okay, I am able to move on to the next part of the cash flow statement, which is the investing activity. So any activity that most of the time involved in the purchase or sale of long-term assets, such as property, plant, or equipment, selling bonds or selling stocks. So, for example, if a company purchases equipment, this is registered as a cash outflow because cash was used. However, if a company decide to sell some investments on their portfolio, it reflects as a cash inflow because cash was provided from that operations. And then I look at the financing activities, okay, where now this shows the cash flow from all the financial activities. And before jumping into the financial activities, I ask myself, okay, what is this investing activities, right? So give me an example, ChatGPT, thanks for that. And so give me an example of long-term assets, because after all these investing activities, review the cash flow from all of this activity, which generally, according to the beginner guide to financial statement, which generally include purchase or sale of long-term assets. Okay, So when I ask here example of long-term assets, it provides me a huge amount of example, right? So you have is, for example, long-term assets. Broadly speaking, we have property, plant, and equipment, intangible assets, whether it is patents, trademark, copyright, trade secrets, goodwill, customer loyalty, right? Intangible assets, investment, okay, so long-term investment, such as stocks, bonds, mutual funds, uh, goodwill, which is another long-term assets, as well as long-term receivable, natural resource, leasehold improvement is a leasehold. This word leasehold exactly. So this leasehold or this lease, right? So this is leasehold improvement and other long-term assets and deferred charge. Again, by looking at this, most common or broadly speaking is this long-term assets, okay, whether it's property, plant, and equipment, intangible assets, patents, copyrights, trademarks, trade secrets, goodwill, customer loyalty, investments such as stocks, bonds, mutual funds, long-term receivables, natural resource, and leaseholds improvement. Then, if I want to look at the specific of this, all right, this is financing activities. If I want to look at the specific of this, so a list of financing activities, no, a list of financing, yes, a list of investing activities. Let me, a list of investing activities. Okay. So purchase of property, plant, equipment, acquisition of other business, investment in marketable securities, purchase of intangible asset, purchase or investment in other company, proceeds from sale or long-term assets, sale of investment in marketable securities, sale of investment in other companies, cash flow from lending activities. Cash flow from lending activities. This is a loan or an investing activity. Payment for research and development. Payment for intellectual property. This includes acquiring license or rights to use intellectual property such as patent, trademark, or copyright. Exploration and development of natural resources. So companies involved in industries such as mining, oil and gas, or forestry may invest in exploration activities or the development of natural resource reserve. Okay, but this is a list of investing activity. Now provide me here a list of investment activities. A long list of investment activities. Investment in telecommunication infrastructure, purchase of sales and policy trade companies, acquisition of privately held company or startups, acquisition of privately held company or startups, investment in joint ventures or strategic partner, purchase a government or corporate bond. Oh my God. Purchase and investment, purchase and investment, purchase and investment. Investment in real estate, investment trust. Acquisition of mutual fund or exchange trade funds. Investment in research and development project. So I'm just going to keep this list short as possible for the sake of the example. Again, 80% following is the Pareto principle: 80% of the effort or 20% of the effort to get 80% of the results, just like that. Okay. So okay. All right. So when we talk about short-term assets, we mean is intangible assets, whether it's patent, trademark, copyrights, trade secrets, goodwill, customer loyalty, and other long-term assets, property, plant, and equipment, natural resource, leaseholds improvement. Okay, so this is just to mention a couple examples of long-term assets. Why? Because, well, operating activities, which is the second part of the cash flow statement, review the cash from one of these activities, this investing activity, and generally include is the purchase or sale of these long-term assets, whether it is purchase or sale of intangible assets, patent, trademark, copyrights, goodwill, trade secrets, property, plant, and equipment, right? So if you purchase, for example, and property, plant, and equipment, that operation is recorded as a cash outflow because cash was used to purchase that. But if you, for example, sell something, let's say you sell some investment in your portfolio, well, that's registered as a cash inflow because you receive cash from that operation. So this is just broadly speaking about this investing activities. Okay, all right, okay. And then I look at the financing activities. Okay, the third part of the cash flow statement. So if we look at the Yahoo, and we review is the Coca-Cola company here. Okay. Okie dokie. The financials, income statement, balance sheet, and cash flow. All right. Interesting. All of these index are low. Well, not that much. So yeah, this is Coca-Cola company, right? So with Coca-Cola here, by looking at the cash flow, let's look at okay, Coca-Cola, okay. And also I want to look at, for example, Apple Inc. Okay, as well as another company here, which is Tesla. I don't think you load that properly. Tesla. Will you search that? Isn't they using this as a single page application? Yeah, of course they do. Good afternoon. No, what? Wow. The search engine, holy. Okay. Okay. Whatever. Tesla. Ooh, Palantir. Tesla. Right? Okay. So this is Tesla. Okay, cool, cool. All right, so we can see from these three companies, okay, and of course after they purge significant, oh no, wait, for the last year, okay, so after they purge a significant amount of, yeah, after they purge a significant amount of people from there, okay, well, well. The same for Tesla, okay. And what about in Coke? No, this is, let me see from the year. That's right. From here. Um, Let me look now. This is what in summary. Okay, summary of the Coca-Cola here from the last year. Okay, okay. So by looking now at the financials. Okay, so here we are on the operating cash flow and investing cash flow and financing cash flow from Coca-Cola. We can see it is numbers. No, cash flow, please. Show cash flow. Show cash flow. No. Oh, I have some. Okay, I have some issue here with my internet. Please connect to this closer Wi-Fi. Come on, come on, come on. You just want to look at the cash flow here. Wow, okay, I love it, man. You gotta be, oh, okay, whatever, man. Doesn't matter. Doesn't matter. So by looking at the cash flow here, okay, from Coca-Cola and holy and Apple, God, and Tesla, interesting, very, very interesting, very, very, very interesting. What about from Google? Okay, what about from Google? The financials. Up, show me the financials, please. That's right. So let me look at the cash flow. Okay, so how much money a company generate within a year, in this case, annual, or can be quarterly. Okay, so Alphabet possess or it received this amount of cash from operating activities. Tesla, in this case, this, and Apple, this huge amount of money. As well as Coca-Cola. Okay. All right. Holy fuck, man. This is too Jesus. Holy Jesus. Anyway. All right. So with this, right? So by looking now at the different financial statement per companies, now able to understand or to make sense. Holy bloody money. So yeah, just making a quick recap of everything that I have learned so far in the last 6 months. That has been very, very, very interesting, by the way. And this has given me a lot of, it's like you have a new superpower, something like that. But you have now skills and you are competent enough to now look at a set of financial statement, income, balance sheet, or cash flow, and make sense of it. Okay, so here the bottom line of this show, the holy hell, the show is the net increase or decrease in cash. For example, in 2019, they increased, so it increased not that much, even though they never stopped losing, so repurchase of capital stock. So what they're doing is they just repurchase their own assets. Okay. Interesting. Interesting. Repurchasing their own assets. So in this case, repurchasing their own stocks. Repayment of debt, and repurchase of capital stocks. Interesting. And repurchase of capital stocks, even though Coca-Cola doesn't do that much. Interesting. They're not reinvesting too much in their own stocks. Funny. Very, very funny. Very, very, very funny. Okay. All right. So, to make this quick recap of the investing cash flow and from investing cash flow. So, this is the second part of the cash flow statement that review the cash from investing activities. And generally, it includes the purchase of or sale of long-term assets, whether are property, plant, equipment, intangible assets such as patent, trademark, copyrights, trade secrets, as well as trade secrets, as well as goodwill, leisure improvement in a house. So all these kind of things, right? Leisure improvement. So all of these are example of long-term assets. So with that, so for example, if you or let's say a company purchase an equipment, so this activity is registered as a cash outflow because cash was used to pay that in cash, right? However, if a company decides to sell some investment on their portfolio, so this activity is registered as a cash inflow because cash was provided for that. And then I look at the financing activities, okay, where now these financing activities, okay, which is the third part of the cash flow statement. The third part show is the cash flow from financing activities, and typical source of cash flow include cash raised by selling stocks. Okay, because again, this is reviewing is the cash flow from one of these activities. Okay, it's reviewing the cash flow from financing activity. Typically, source of cash flow include, think about it, or financing. Would you ask a loan? That might be. Would you ask a loan to a bank? That maybe is what else? What else? Yeah, when you ask a loan, so when you ask a loan, okay, how do you register that activity? Well, actually, this is an inflow of cash because you receive cash from one of these financing activities, okay. But if you, for example, lend money, that's a cash outflow from the financial activity. So selling stocks or bonds, uh, okay, cash flow include cash raised by selling stocks or borrowing from banks. That makes a lot of sense. Likewise, paying back, exactly likewise, uh, paying back a bank loan will show up as a use of cash flow. Again, you no longer have that cash, but you repay your obligations. Okay. Mhm. So let me keep reading about this. Okay, so let's first look at financing activities. Okay, so financing activities examples are transactions that involve the company long-term liabilities and equity. Financing activities that involve in the long-term liabilities and equity. This activity primarily involves raising capital from investors or creditor to fund the company's operations, repay debt, or distribute profits to shareholders. Here are some examples of financing include of financial activities. Issuing equity. So when a company raises capital by selling shares of its common stocks or preferred stock to investors, this can occur through initial public offering, IPOs, secondary offerings or private placement, okay, issuing equity, financing activity. But this financing activity, as the name suggests, involve the company long-term liabilities and equity. So by issuing equity, I don't have by issuing equity, this is one of the financing activity. Issuing equity, so you can raise funds from investors. So by selling more shares to the company. And this can occur through initial public offering, IPOs, secondary offering or private placement. Issuing debt. Okay, one of them is issuing equity. And if I remember, equity is a portion. So equity can be a couple of things, right? Depending on the context, equity can be is uh, interesting. So equity. Come on. is a piece of equity. So equity is a piece of ownership. Okay, it's a piece of ownership. Most of the time, equity refers to a piece of ownership. So when you issuing equity, so you are giving up a piece of ownership of your company. So you can raise funds from other investors. Okay. So issuing debt is another financial instrument of corporate, where now this instrument, they represent a promise to repay the borrow amount. So this is completely different from equity. Okay, issuing debt. So when I issue in debt, it's like I'm going to repay you this, but you don't own anything that I have. But if I issue equity, so I give you a portion of ownership. Okay, and the other is repaying debt, right? Repaying debt. Okay, this is another financial activity. Okay, so when a company makes principal payments on outstanding debt, including both short-term and long-term liabilities, this may involve repurchasing bonds, redeeming debentures, or making scheduled loan repayments. Repaying debt. So when a company makes principal payments on its outstanding debt, including both short-term and long-term liabilities, this may involve repurchasing bonds, redeeming debentures, or making scheduled loans repayment. This is a financial activity. Interesting. It can be a financial activity. Interesting. Financial activities are transactions that involve the company long-term liabilities and equity. Are transactions that involve the company long-term liabilities and equity. Long-term liabilities, example of this, you know, examples. Long-term liabilities, long-term loans, bonds payable, notes payable, lease obligations, deferred income taxes, contingent liabilities, long-term debenture, deferred compensation, capital lease obligations, convertible debt, asset retirement obligation. And this is a liability for the company. Okay, but it says long-term loans, bonds payable, notes payable, so which is a reading agreement to repay the borrower, to repay borrowed funds over an extended period. Notes payable. In Spanish, this is notes payable. Como cuentas o notas a pagar in Spanish. So notes payable, bonds payable, long-term loans, and lease obligations. Okay. So these long-term obligations or long-term liabilities, whether it's long-term loans, bonds payable, notes payable, and agreements to repay the borrower funds over an extended period, typically more than a year. So notes payable can be issued to financial institutions, supplier, or other parties. Lease obligations, long-term lease agreements, such as operating lease or financing lease, can give rise to long-term lease obligations that represent the future lease payment that a company is obligated to make. Pension liability, deferred compensation. Okay, so long-term liabilities like long-term loans, bonds payable, notes payable, and lease obligations. Again, all of this is to look at the investing, no, I mean at the financing activities, which is a transaction that a company, are transactions that involve the company long-term liabilities and equity. And long-term liabilities are long-term loans, bonds payable, notes payable, notes payable, repayment leisures repayment, or leisures debt. So financing activities are transactions that involve the company long-term liabilities and equity. And this activity primarily involves raising capital from investors or creditors. But again, financing activities are transactions that involve long-term liabilities and equity. An example of these long-term liabilities, something that I describe, is notes, long-term or long-term loans, bonds payable, notes payable, an agreement to repay the amount borrowed in a long run, in the long term, typically more than a year. So long-term liabilities and equity. Okay. Long-term liabilities and equity. Okay, so this is interesting. Again, the financial operations or financial activities are transactions that involve the company long-term liabilities and equity. So for example, issuing equity, issuing ownership, so perhaps issuing stocks or preferred stocks, issuing debt. Okay, so instead of issuing equity or part of the ownership, now you issue is a promise to repay that amount borrowed, to repay the borrow amount with interest at a specified future date. And repaying debt, so when a company makes principal payments on its outstanding debt. Repaying debt. So that'll be all for this video, right? Take care. Bye bye.